Bitcoin was seen as the best performing asset in the sense it gave a return of nearly 600% last year. But cryptos are volatile, and here's a quick reminder of how volatile they can end up being. The Bitcoin has fallen nearly 40% since its high of 64,000 in February. The 24-hour price range is from a low of $38,960 to a high of $45,850. Look at that volatility in just a 24-hour long time span. Ethereum is also selling off. It is down below $3,000 for the first time since May 2nd. What's going on? We thought we'll try and figure that out with Ray Wang, who's joining us all the way from Silicon Valley. He's, of course, the big boss at Constellation Research. Ray, we love having you on the show. Thanks once again for waking up super early to be a part of the live broadcast. Now, we had, of course, scheduled our conversation to be about the Google event, an event that was not held in 2020 and was making a comeback after 2 years. But cryptos have stolen the show, and how? Look at this volatility, this big sell-off that you're seeing. What do you make of it?
Well, good evening. What's happening are a couple of factors. One is the U.S. dollar is bouncing back from some massive lows in the past, and that's actually impacting the Bitcoin exchange rates. And then I think the other piece is really what's been going on overall globally in terms of the global reception. China's comments, I think other governments are going to lay down some rules around what's going on with cryptocurrencies as well. And then, of course, the other piece that's important is tech stocks are also dropping. And so you're seeing a relationship between tech stocks, U.S. dollar, and some regulatory pressure all coming at the same time, which is taking Bitcoin below its $1 trillion market cap and really much, probably one of its biggest lows of the year. And so I think there are a lot of folks that are wondering, okay, how much more volatility will we see on the Bitcoin side? And of course, all other cryptocurrencies, even dogecoin took some hits.
I'll get to the alts in just a bit. Some of the points that you were highlighting is something I was reading on Cointelegraph as well, which has said that the US dollar currency index is actually inversely proportional to Bitcoin. Can you explain to our viewers what that exactly means?
Yeah, so when the dollar is running low in terms of exchange rates, Bitcoin is actually running high. When the dollar is coming back, the Bitcoin numbers actually go down. And it's really because a bet on Bitcoin is a bet on the devaluation of the dollar. And so when the dollar valuation comes back up, then people realize, okay, Bitcoin's got to adjust accordingly. At least that's how it's actually set up at this moment.
And this rationale that when the tech stocks start losing steam, it impacts the Bitcoin. Now, this is a people's currency. I'm playing devil's advocate here. Those that are pro-crypto talk about how it is the people's currency. It's how the metaverse is being ruled by it, and it's going to rule this universe as well. So then why should there be a correlation with the tech stocks and Bitcoin?
There still is a correlation, because if you think about this is tied back to how retail traders, retail investors invest. The Bitcoin angle was really how they actually take their gains and then buy tech stocks. They take their gains from the tech stocks, buy Bitcoin. And that trade has been going back and forth for a lot of the retail investors, especially the ones that are betting on Bitcoin.
Now, what I want to talk to you about China, and this is something, again, what I was reading on Cointelegraph. They're calling it the classic FUD. Now, for all of you that may not know FUD, it's a term that's very often used by advertisers and marketers, where they talk about FUD as fear, uncertainty, and doubt. Now, many people believe that, the last time around when China also did this and said this a few years ago, you saw the best rally for the Bitcoin. But clearly this time there is fear. You have not seen sovereigns back cryptos the way it had been expected. Is that why there is so much angst, so much fear? We are, I think, way beyond the Elon Musk dip now.
Well, this one is interesting. As many people know, China is actively mining Bitcoins. They've got massive operations, really mining as many coins as possible. So on one hand, they're backing Bitcoins as a government, but it's really a play to make the Chinese yuan the reserve currency of the world. And so these two things don't add up in terms of when you look at it initially, you say, okay, why are people doing this? But what China wants to do in the long run is, win the war in terms of the reserve currency battle with the U.S. And more importantly, these are hedges against the U.S. dollar as well for China. And so when you take it on that perspective, they really don't want anyone in China to be playing in cryptos, and they really want to lay down the edict of that. And they've been cracking down on cryptos. They've been cracking down on their tech companies, as well as cracking down in terms of making sure that in their Belt and Road initiatives that, the digital yuan becomes the cryptocurrency instead of Bitcoin. So they're doing a whole bunch of strategies to really put China's, yuan as the reserve currency and really battle the US dollar for dominance in terms of which currency is going to be used around the world. And so cryptos are a threat, but they're mining a lot of cryptos is what makes it very interesting.
Now, what's also been very interesting, of course, has been Elon Musk's flip-flop that, yes, you can first use Bitcoins to buy Tesla, then you can't use it, whether they're going to sell off their holdings in Bitcoin or not. But what we've also seen are other announcements which would allow payments in Bitcoin. Today, just a few hours ago, for example, it has been said that, crypto payments would be allowed at the duty-free shopping in Dubai. How is one supposed to see all of this?
Well, we're at the early stages of cryptocurrencies and cryptocurrency acceptance, right? Bitcoin today is an asset. Millennials trade and speculate in Bitcoin, just like those that are older than millennials trade and speculate in gold. And so you have to treat that as that asset class on the Bitcoin side. On the cryptocurrency side, we can see lots of cryptocurrencies emerging in the future, thinking about how they're tied back to, for example, airline loyalty programs, or tied back to loyalty programs in general, where you can actually take, what actually allocated and turn that into a crypto. For example, airline mileage programs are a great example. They're allocated a penny per mile. They're redeemed at 1.6 cents to 6 cents a mile, depending whether you buy airline trips or whether you decide to use that for a magazine, or if you decide to buy electronics or jewelry, right? You could cryptocurrency an airline point system or loyalty program and then use that as a currency around the world. A great example would be Air India, Star Alliance. If you took the airline program there, suddenly you'd have access not just to all of India, you have access to 760 million flyers with a fiat currency and a cross-border tax-free value exchange. So there are lots of opportunities to create new types of currencies, especially if there's a sound backing in terms of how those currencies are allocated. And airline miles, for example, is one of those. And that's what I have in my new book at some point. You'll see that in there.
Okay, you really used the lockdown and the pandemic time to write that book. Looking forward to it, Ray. But before I move on, I want to get a quick word from you as far as the alts go. Some of them, of course, started off as jokes, like the dogecoin, but it's become the fourth largest crypto in the world. You're suddenly seeing all these meme-based coins also gain traction. So there's kind of volatility that when you see, and a whole host of blogs that are writing there, it's actually the newbies who are selling out, the more savvy old investors are staying. I don't know if you have enough data on what basis they're actually saying all of this, but that seems to be the theory that is being put out.
Well, there is a theory there. There's some hardcore folks that are into cryptos that bought early. And for them, the meme stocks, if you bought Dogecoin at like 10 cents or 12 cents, you really don't care that it's at 36 cents, right? That's not going to affect you. You're in the long haul and you're okay. We had a recent rush of retail crypto investors that came in and that were just basically playing this the same way they played the meme stocks. Though one meme stock, Hertz, is actually doing really well. But in general, most people were just speculating. And especially in the US, where we had a lot of stimulus checks, where some people had a lot of excess amount of money and a lot of excess time and access to direct to brokerage apps like Robinhood, they could actually easily go out and play these meme stocks. And so with Dogecoin, with Shiba Inu, I mean the other dog coin that's going on with NFTs, I mean it's all rush in. But this is just the beginning of the crypto revolution. There's a lot more ups and downs to happen, but we're going to see at some point one or two cryptocurrencies emerge as the standard. Bitcoin looks like the leader. Ethereum looks like a leader in this place, and of course there's going to be other coins that are going to come along the way. But you can't laugh at multi-billion-dollar market caps. Dogecoin is probably sitting at about 50 billion, less than 50 billion in a market cap, and that's pretty significant.
And in fact, as far as Bitcoin goes, and something that one of the most vociferous proponents who's now switched camps is Elon Musk, who said the insane amount of energy. Now, we all have read about the energy consumption, so obviously Elon Musk must have known about it as well. Now, those in the pro-crypto lobby talk about, well, it still uses less energy than gold mining or the banking industry. You've seen one of the crypto billionaires actually who owns the firm Galaxy take out a blog comparing energy levels, etc. There must be some real data that's out there that this is how much it's used for mining bitcoins, and this is how much it's used for whether it's banking or gold mining, etc. So why is it so subjective?
So I don't have that data, but I think when you look at the mining operations and the carbon footprint for mining overall for precious metals, and you compare that with minting and what actually happens with, how you actually print money or create money, that process is also pretty intensive. It's definitely less intensive than mining a Bitcoin or mining in general, but the way Bitcoin was designed, it was designed to create a fixed, finite limit amount of coins. And by doing that, right, it's incrementally harder and harder to mine the next coin, which is designed to be a forcing function. Is that more expensive than compute power at large data centers? Probably not. But I think what people are trying to look at is, hey, what's the overall cost structure of what a Bitcoin is? And when Elon was probably identifying, let's assume he was identifying dogecoin, which doesn't have a mining operation in the sense of computer mining, then okay, yeah, that's definitely, dogecoin is definitely more environmentally friendly than Bitcoin, but it doesn't have a finite limit, right? And that's really what is the attraction to Bitcoin, is that finite limit of coins, as opposed to, you can print as many coins and issue as much, dollar denominated backed or currencies or paperback currencies as you want to. You can keep printing rupees, dollars, yen, pounds. It doesn't matter. Nobody cares. There's no limit, right? And we've seen that already in a lot of foreign governments. And that's why the attraction to cryptocurrencies like Bitcoin.
Ray, before I let you go, are you going to order a pizza on May 22nd? I didn't even know there was a Bitcoin Pizza Day, but now I know there's a Bitcoin Pizza Day. It came about 11 years ago. And you've got tech investor and crypto influencer Anthony Pompliano taking to Twitter, talking about how it's going to go live in 10 cities. You can order a pizza on Bitcoin Pizza Day, and the proceeds will go for Bitcoin development. What is Bitcoin development?
So the pizza day basically is, so Laszlo went out and bought pizzas with 10,000 Bitcoins for 2 pizzas, which at this point seems crazy. But it was very, very early in the crypto phase. I probably have Bitcoins sitting on little thumb drives with security keys that I don't know about, right? At that point, nobody cared. We're all people were all playing with Bitcoins and trying to see, hey, what was going on with this technology? So, but it's really just a recognition of the fact that was the first ever transaction made. And I think, the Bitcoin development is really to get other people interested in Bitcoin and blockchain technologies as they're thinking about smart contracts, thinking about new types of business models. But that's really what this is all about. And yeah, I probably will order pizza, but I won't be paying in Bitcoin. So.
It's always a pleasure talking to you, Ray. I know we were supposed to get you for the Google conference, but looking at what's happened in cryptos, we knew that it'll be better to have this conversation instead. So thanks a lot.
No, take care.